What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we have an alert. We've got to talk about the breakout of Swiftcoin. Now, before we jump straight head first into this, let me remind you that this is not financial advice. The crypto market is very volatile. It's dangerous, and you can lose everything if you don't know what you're doing. So please be very, very careful. So here we are on the Swiftcoin 1-day chart, and we can see that we have just broken through and we hit an all-time high as price peaked out at 4 cents, and we're currently at 3.63 cents. So what I am considering doing right now is possibly selling half the bag and picking it back up on the rebound, but I haven't really made a decision on that as of this point. But those of you who are in the paid group, in the private group, I will let you know if I make that move tonight, and that has yet to be determined. Now, let's just jump over and check out what the volume action is looking like here on CoinGecko. Let's pull up Swiftcoin. And then we're going to look at the 1-hour chart, the 30-minute chart, and the 15-minute chart. And I'm going to show you how I make decisions on whether or not I'm going to pull off a swing trade. Now, one thing that I really like that I'm seeing right now is this explosion in volume. $285 million on the 24-hour volume. And the market cap is only at 357 million. And I think that we've got quite a ways to go from there. We'll talk possibilities on the next video. On this one, let's just focus on the breakout. So there we have it. That's CoinGecko. Moving back to the chart. Let's see what it's looking like as price is kind of slipping back to 3.59 to 3.6 as we speak. And here's how we can get an idea of what can happen next, and then I'll draw you a new box and show you where we might find the next support level. So on the 4-hour chart, we can see that right now the stochastic has rolled over. Here it is right here in the oversold zone. The blue line, which is the fast oscillator, has crossed over the slow line, which is the orange. Now, my chart settings, the way that I like to set it up is to put the rounding at a 3. That way, the stochastic is not as messy, okay? And just jagged points up and down where you can't see where the overall momentum is going. So as that is crossed over, that lets me know that this could correct and come back down, or it could push back up yet again. We could have a double peak like we did here. We pushed up to a price of about 3.5 cents, corrected, and then jumped back all the way to 3.8 before the correction and the consolidation move. Now, here's what you need to know. Whenever we hit an all-time high, everyone goes crazy and they think it's just going to go straight up to the moon from here. So they ape in and buy at the peak. And that violates my number one rule, which is you never, ever buy on a stochastic peak. If you're looking to buy when the stochastic is here, you're too late. If you're looking to buy here, you're too late. This has already come up from what, 0.002? I think that's where I first got into this and picked up 100 some odd thousand of Swiftcoin. I had 200,000, but I sold half of it way back when and flipped that into something else. So right now, of course, since it's going straight up, your novice investors think, oh my God, it's going to the moon. I got to buy in right now. And then they get left up here at the peak when the price corrects. Because 9 times out of 10, you're going to come back down and consolidate. That's where things settle down and you find a new base level for the price action. Now, there's 2 possible things that I'm thinking that could happen as far as the consolidation move is concerned. We could find a base at the top of this box that I just drew. This is new since the last video. We could also come all the way back down to the base of this box before we take our next move up. In fact, you got this big volume node sticking out right here. It could come all the way down to there. But it could also stop here. We have a big volume node at the top of the box. This is the VPVR, volume profile visible range, and it tells you how much buying and selling is going at a particular price point. Instead of a candle here, this bar tells you how much is bought at a particular time. You need to understand the difference. So these VPVR nodes, or these big long bars where they stick out, those represent price points that there is a lot of institutional or trade bot action going on. So in other words, the automated traders might say, hey, if we get to this price, buy a lot. If we get to this price, buy a lot. Or if we move up to this node, sell a lot. And that's why the volume on the VPVR goes down in between those nodes. See, it sticks out here, then it goes down. It sticks out here, then it goes down. It sticks out here, and then there's a big slip zone here. I like to call that a slip zone. And then you have a huge node right here, and then the point of control price, which is where the majority of the buying and selling volume is going on. Okay, so probability-wise, we can say that the highest probability, even though it might not happen, is that we jump down to this node. The next probability, which is lower than the highest, is that we come all the way back down to the box to this node. We've also got a probability of moving higher from here, but I would say that's third in line. And that's why I'm hesitating as price is moving up right now. And I'm going to show you why price is moving up right now. We can't see it on this 4-hour chart, but we're going to be able to see it as we zoom in. Now on the 1-hour chart, we had the peak, it comes down, it goes bullish again, and now the blue line is about to cross the orange line, which says a little bit bearish momentum. And then the lagging indicators, the lagging stochastic oscillators down here on the MACD, they're about to cross over there. But it could unfurl and continue up. But this one lets me know that something significant is going to happen. We're either going to cross over at this point and continue down and start to print red bars on the histogram. In other words, we fall below the zero line and we start to do this, okay? See, when price is going down, we fall below the zero line like we did here, just barely there, and it came right back up, and we did it again here. So what we had up until this point was a consolidation move. After this peak, I told you guys it was going to correct and it's going to find a new base. We drew out that base and we determined it would be 20 cents. So price stays in this area here, jumping around 20 cents at this big volume node. See, it's magical, right? Right there, you see this volume node that's sticking out here? That's where price was sticking during the consolidation move, all right? So what can happen next here based on the 1-hour chart is we could dip down a little bit more, or we could pop out from here. But right now it's saying dip down a little bit, but that dip might be that the price line stays stuck to this volume node right here. This one, that big one sticking out right there. But now in order to help us to understand where we go from this little flag here, we got to zoom into the 30-minute chart and the 15. So let's look into the 30-minute chart. See, this is how I make my decisions on when to buy. The 30-minute chart is bearish. It says we're going down. But when the stochastic is lagging down, blue line below the orange line, we already have a bearish crossover with the oscillators downstairs in the MACD. If this is headed down, but price is not obeying, look at the price. Is it going down? No. It's sticking to this volume node right here. So we call this a divergence. That means that the price is going one direction, and the oscillators are telling us something different as they are going in another direction. Whenever you have a divergence, it means that you are about to have a big move. And that big move will either be blowing up to the upside and finding a new all-time high, or correcting down and finding a consolidation base. So here are two green candles on the 30-minute chart while the stochastic is slumping. So that means we need to go all the way down to the 15-minute chart to make sense of this. And on the 15-minute chart, we see that there is a bullish crossover right there. You see the blue line? It just crossed over the orange, and it's pointing upwards, while the lagging MACD oscillators are still pointing downwards, but the blue line is starting to curl up. And then the big indication is, look what the bars are doing on the histogram. So we have the solid red, which says momentum is going downward. Light red says we're trying to make it back to the zero line. Then we change to solid, light, solid, and now light, and we're approaching the zero line. So that could mean that on this 15-minute chart, we probably are going to start to go back to the above the zero line and print green bars on the histogram. So that's why we're looking at that divergence on the 4 hour saying we're supposed to be going down, but price is going up. Well, it's because this quicker chart here based on the 15-minute candles is bullish. Now, here's what happens. We'll either come all the way up to the POC price on this chart, this big node right here that is sitting at a price point of 0.0378, all right, 0.038, somewhere around there, okay? As the two green candles are bullish, they're going to approach this big volume node because the big volume nodes tend to pull the price into their direction, and this is the closest one that's sticking out. Now, if that should fail, if it stays here, then you'll see us fall back down to that next volume node, which is right here because there's a slip zone in here. That's a slip zone. So we could fall down to this node. And if we feel that, then we go back downstairs into the green box at around 20.023 to 0.25. So that's why I'm watching right now, why I haven't sold half of the bag, because I want to make sure not to sell it and then it jumps up again. But one thing that I will mention, let's go back to the one-day chart and look at this. We've got this new all-time high here. This was a red candle here. So what could possibly happen is after a correction, then we're going to have a new base level up here. But it's probably going to correct down here, and then we will form new market structure. And it'll happen just like we saw before. What does that mean? It means that these two previous peaks are going to be the market structure for the next major move. And so price can correct. We're going to come off of this, and if we fail, we're going to drip on down, slip on down, and either find support at the bottom of this little box that I drew here, which could be where the market support is, market structure. And if not, it's definitely going to find support down here at the previous all-time high that happened right there. All right. And that price just happens to touch point at 1.5 cents. But I'm thinking 20 cents is the new base, and that is where our market structure could be. So we may be able to go ahead and just extend this box on out a little bit, because that might be where we consolidate for the next move, and then we'll have a shelf up here that will blow straight through, and that will be the new base. So that explains the action right now. And what's really worth noting is that we have surpassed the price of XEN. Now, XEN looks like a big crossover is about to happen on the lagging oscillators, but the stochastic oscillator has crossed over bullish, so we'll have to see. That's a divergence. I'm thinking that we'll come back down into this box before we jump up and have another surge. And then we might form new market structure where this 5 cents level that we almost hit before becomes the new base. So, like I was mentioning before, if you want to know when I buy and sell and swing trade, and if you want the hot tips on the ones that are about to explode, I've done a lot of research. You can have access to my research and training by joining the private group for $50 USDT per month. Hit the link in the description below to jump to my page. There's an explainer that tells you what you're getting and what you're paying me for. You're not paying me to make price predictions so you can get rich overnight, because anything can happen. And I'm not telling you that 100% of the time I can predict what these prices are going to be or which way they're going to break out. But what you're getting is all of the hard work that I've put together. If you're too busy to do this all day and all night like I do, well, you can benefit from the hard work I've done. And that's what you get in the private members group. And I'd like to welcome all of the new members. We had 10 people that just came on board earlier this week. And I announced in the last video that I'm going to do some test training, because a lot of people have been asking for training, if I will do a training course, and I will. I'm going to be rolling out a course where I'm going to take on 10 people at a time and do live training, Q&A, have follow-up videos that you can study, and it's going to be $250. And I'm only going to do 10 at a time. But the people who are the members in the private group right now are going to be my guinea pigs, and they're going to get to participate in my trial run for doing training. And so here we're pushing up again, almost bouncing up to 3.7. So it's looking pretty good.
Yay!
Okay. So anyway, you want to definitely subscribe now if you haven't. Welcome aboard all of the new folks to the channel. Love to have you here. Tick the notification bell, hit the like button, all that good stuff so you don't miss my future videos. And like I said, hit the links in the description below if you are interested in the private group. And that is all I've got for now. Until next time, this is Carlton, and I am out.